With slowing economic growth in China, interest rates rising in the US, and the commodity slump hitting producer countries, there are plenty of reasons to be worried about the global economy, not to mention mass migration, war, terrorism, and political uncertainty. Global economic growth is going to be disappointing and patchy in 2016, according to the IMF, and prospects for the medium term are worsening, with persistent low productivity and aging populations. So is this what secular stagnation looks like? Or is this all far too pessimistic and doom-laden? Will we muddle through with modest growth but no big crises? Welcome to The Big Question, the monthly video series from Capital Ideas at Chicago Booth. I'm Hal Weitzman, and with me to discuss the issue is an expert panel. Randall Kroszner is the Norman R. Bobbins Professor of Economics at Chicago Booth. He was a governor of the Federal Reserve from 2006 to 2009 and a member of President George W. Bush's Council of Economic Advisors from 2001 to 2003. Amir Sufi is the Bruce Lindsay Professor of Economics and Public Policy at Chicago Booth. He's the co-author of House of Debt, How They and You Caused the Great Recession and How We Can Prevent It from Happening Again. And James Robinson is a professor at the Harris School of Public Policy at the University of Chicago. He's the co-author of the best-selling book, Why Nations Fail, The Origins of Power, Prosperity, and Poverty. Panel, welcome to The Big Question. Randy Kroszner, let me start with you. China is what everyone is concerned about at the moment, particularly the financial sector there with the prospect of possible bank failures. How concerned should we be for the global economy about what's happening in China?
Well, I think with China becoming the world's second largest economy, of course, it's much more important than it had been before and has grown very rapidly. Certainly, there have been problems in the banking system in the early part of this century, but they were able to deal with those relatively easily domestically, but now there can be bigger ramifications. I think the key challenge is what they've done is by trying to defend the stock market, they've dramatically increased the exposure of the entire financial system to the stock market. So when the turn in the stock market came when they were doing a very sensible macroprudential policy, saying there was too much shadow bank lending to margin finance for people borrowing to buy stocks. That then precipitated the downfall. But in some sense, that was what they were trying to do, to take some of the air out of the bubble in the stock market. But what they did in response is said, this is a problem. So let's continue to lend and maybe increase lending. Let's make sure everybody buys and not permit people to sell. So now the insurance companies, the banks, the securities firms have much bigger exposure to the stock market than they had before. That makes things a bit more fragile than they'd otherwise been. And
should we be worried about the stock market specifically, or, what about the general Chinese economy?
One would only worry about the stock market to the extent that it causes difficulty for the financial system generally. The stock market moving up and down, that in and of itself is not causing the problems globally or causing the problems in China. What it is if there's an economic slowdown and you make the banking system much more fragile, that's really problematic.
Okay. Amir Sufi, what about the Chinese economy? What are the kind of headwinds? What are the factors that concern you?
Yeah, I think a lot of people have focused on the banking sector, and obviously there's big problems there. McKinsey Global Institute put out a nice report just tracking debt to income ratios in different countries. And if you look at it, unsurprisingly, China leads the world in terms of the growth in debt to income ratios for the financial sector from 2007 to 2014, which is really when a lot of this boom was happening. But it also is third when it comes to the expansion in corporate debt, and fourth out of 50 countries in terms of household debt to income ratios. So more broadly than just the financial sector, China has kind of followed the exact model that we know historically leads to pretty severe economic downturns, and that is huge increases in debt to finance housing booms, to finance consumer durables, and those typically end very badly, and that's my fear, is that it could end up very badly for China.
It sounds like it, according to your description, sort of has to end in a crisis sooner or later.
Yeah, I think the argument at this point in my head is, will China do poorly or terribly? I think that's kind of the two options I see going
Can
forward.
it avoid a sort of hard landing, a real crisis?
I think that people point to first, the exception to the rule they say is, well, look, China has run current account surpluses, they have large reserves, so unlike Greece or even the United States, we weren't running current account deficits, and so they have capacity to fight against this thing. And the other thing that people say is, well, China is essentially planned economy. I'm not particularly convinced by either of those. I think it does help that you're running current account surpluses and that you have extra reserves at the central bank. But the same was true of Japan in the late 1980s, and it looks a lot like what happened in Japan in terms of the run-up. Big increases in commercial real estate prices, big increases in commercial real estate investment, and so that does lead me to worry that despite the fact that maybe they can shift some resources around, you're still going to see a pretty severe economic downturn in China.
Okay, Randy Kroszner, that was a somewhat more pessimistic view than yours. I mean, you still think they're going to be able to muddle through and avoid a crisis in China?
Well, I think it depends a lot on the policies. They've made things more fragile. I completely agree with what Amir has said, that they have a lot of debt, and both in the official sector and in the semi-private sector, and that makes things fragile to begin with. They've dramatically increased the exposure to the equity markets, which you have to remember that there's a big up and down in the equity markets in China back in 2006 to 2008. That left no imprint, and they made it through the global financial crisis reasonably well. So the stock market movement up and down doesn't necessarily have any impact on the real economy or cause the broader financial fragility. It's this buildup of debt in response to try to make it through the global financial crisis in a short-term healthy way that in some sense is a little bit of a ticking time bomb. I'm not quite as pessimistic as Amir is, but it is something that they're going to have to be very careful to deal with. And although they have a lot of reserves, you can blow through those reserves relatively quickly. I mean, at $100 billion a month, which seems to be what they're doing, even if you have $3 trillion worth of reserves, that doesn't last all that long. And even if it is going to last a while, once the markets see that you're going to start blowing through that, then the markets start really questioning things.
Two numbers that I've just been looking at that I think are quite scary to me is one, if you look at a measure of economic activity like electricity consumption. So it was basically 25% year-over-year growth in electricity consumption in 2010. It was 15% in 2012, and it was 0% in 2015. That's a pretty worrisome sign. The other number that just came out at the beginning of January was freight capacity and freight quantities being shipped, and it was actually down 11% year over year, which is the worst reading in its history of being followed in China. So my view is that whenever you have a situation in which people have built far too many buildings, they've bought too many cars, a lot of people have bought houses they can't afford, that usually portends bad things, and so that's why I am probably a little bit more pessimistic.
And one of the reasons for that overcapacity, as you mentioned earlier, is central planning. James Robinson, let me bring you in. I mean, can China achieve long-term economic growth, sustainable economic growth, if it doesn't fundamentally reform its political system?
No, I don't think. I mean, apart from all of these dynamics that we've been talking about here, I would say the bigger problem in the long run for China, whether or not there's a financial crisis or whatever, is the businessmen disappearing for a few days and nobody knows where they are, and then they reappear, and that to me is a sort of fascinating example of just this fundamentally kind of autocratic political system, unreformed autocratic political system that there is in China. And I would say, you just can't build a modern, successful, prosperous society when you just have this ridiculous concentration of political power. I think if you look historically, there's many instances where, if the people at the top decide this is okay, we can push for this, it works for a while. It works for 10 years or 20 years or 30 years. Or, when I was an undergraduate, we learned that, the Soviet Union was the economic model to follow, and that's well, he's younger than me, so and this was in England, it was in England, not the United States. Maybe you didn't get that, but everyone's laughing now. Yeah. They've forgotten that the Soviet Union did very well for 40 years, and of course there's lots of differences between China and the Soviet Union. But I would say you have to reform this political model if you want to really have enduring prosperity.
And is there any appetite for real fundamental political reform? Do they sense that message that you said, that economic growth is not going to come unless there's that fundamental
No,
reform?
Absolutely not. Quite the opposite. I mean, they have some strategy for sort of consolidating the power of the Communist Party. They think they can adjust with the anti-corruption drive and the term limits for the people at the top. And so I think quite the opposite. I think they're trying to figure out what will help them sort of stabilize their power. But I don't think they have any intention whatsoever of giving power away. Even elections are just a way of, local elections are just a way of trying to figure out, could this help us stabilize power? Or could it help us select better people for the party? And
Randy, what's your sense of the prospects for reform, let's say in financial sector and state-owned enterprises in China?
It's very, very tough. I mean, we talk about all the political economy in the U.S. and how difficult it is to make change. I think in this system, it's just as difficult. Although it may be centrally planned, there are very important power bases that are vying for keeping their slice of the pie. So I don't think it makes it easy to just sort of say, okay, we're going to reform this or reform that. Ultimately, economic growth comes down to the number of hours worked and the output per hour. And China has been incredibly fortunate because they've had so many people, tens of millions of people entering the labor force each year from the hinterlands who, although they were part of China, were not really part of the economy. They've come into the coastal areas, to the large cities. And so you've seen this just astonishing boom. But now China's population is aging. We've passed the peak in working age population. So unless you have growth of output per hour and growth of productivity, you're not going to be able to sustain economic growth. And the only way to do that is to introduce more competition and have reform. Now, that's broadly how the people in power talk about it. But I think the key is going to be whether they will execute. And it seems that what James is talking about seems to be a real problem for making those reforms, introducing more competition, allowing some failure in the system to allow productivity growth. Because without that, we don't have the positive shocks of tens of million people coming into labor force each year. You're just not going to be able to grow like China has.
And one of the things that I think is pretty interesting in terms of where the cyclical and the longer term political issues that James is emphasizing come is actually whenever I talk to people who work in China, who are based in the United States, and I ask them what they think the prospects are for China, they oftentimes say people seem very scared. And they don't mean just in terms of how people were scared in the United States in 2008. They mean scared in terms of things like missing businessmen, missing hedge fund managers who are shorting the market. And so you can imagine that that's going to have a big amplifying effect on any downturn if people start to worry so much. They're not going to invest, they're not going to buy cars, they're not going to build homes. And so that could end up cycling into a worse economic downturn.
Okay, James Robinson, more generally, there's an assumption, isn't there, that that when times are bad, it can prompt reform to be executed. So, for example, in Latin America, a lot of people have said in an economy like Brazil or Argentina, where they're already experiencing bad times and probably more bad times to come, that it's more likely that they will introduce the kinds of reforms they need for long-term economic growth. Is that a valid assumption?
Well, I think you could certainly find examples, of countries which have reformed in the crisis, but you can find lots of other examples of countries that have disreformed in a crisis. So I don't really think there's a robust.
What do you mean by disreformed?
Well, I mean, think about the case of Argentina. It was the massive crisis that brought the Peronists and Kirchner back to power, and they've spent the whole time reversing many of the improvements. They've been renationalizing things that were privatized previously. They've been taking a grip on the society, on the agricultural sector. They've been, undermining, the bureaucracy, predating on the private sector in a quite extraordinary way, controlling prices. You can't even get reliable information out of the Argentine government. No one believes the statistics. So, that was a crisis that brought this political machine back to power. So I think you can find many examples like that. Think about, where did Chavismo come from? How did Chavez get into power? That was on the back of a massive crisis, falling real wages, increasing inequality, huge economic crisis in Venezuela. That's what put Chavismo in power. So I don't think that's a robust generalization at all.
Okay, so you do not expect necessarily any big reforms in Argentina and Venezuela and Brazil and those countries that are really hurting because they produce commodities and those prices have crashed?
No, I don't. I think you could make the opposite argument. That when things are going very badly, this sort of clientelistic way of doing politics actually has more traction with poor people. They're even more reliant on the state for handouts and favors, and so I think you could make the opposite argument.
Okay, Randy Kroszner, with some former economic superstars like Brazil and China now slowing down, what does that mean for developed countries which are now having to bear the burden of growing the global economy, particularly the US? Can the US carry the global economy on its own?
So the US is a very big trading partner in the world, it doesn't depend on the rest of the world as much as other countries do. So Germany, China, Brazil, pretty much any other major country of the world, whether developing or developed, trade is a much more important part of total GDP. The US is a bit more self-contained, so the challenges that are in the rest of the world are not going to have as much of a negative impact on the US as they might have on other countries. The US has grown reasonably steadily through the last few years. Quarter to quarter, a lot of variation, but about 2 to 2.25% growth. We're kind of sliding along at about this rate, no matter what's happened, whether it's tragic terrorist events, whether it has been declines in oil prices that are supposed to have this great consumption dividend, which don't seem to have come in. So either the positive or negative shocks, we just seem to have kind of continued along. I think that's likely to continue to be the case for the U.S. But obviously, we have to look for potential ripples that'll come back from other countries. If there is a crisis in the Middle East, if there is a crisis in China, of course, that could have an impact on the U.S.
Okay, and what about the Federal Reserve? Because a lot of countries have looked to the Federal Reserve and have enjoyed very low interest rates we've had, and now we're at the start of this tightening cycle that's going to carry on. How could that affect, developing economies that are now struggling?
So certainly there've been a lot of garment rending over this over the last year or two about the potential for the Fed to raise rates and then capital flowing out of these countries. But I think it's largely been anticipated that the Fed would begin to raise rates, but raise rates very gently. And so we've gone up 1/4 percentage point. Now, a lot of people seem to think that a 1/4 percentage point, the world was going to be made or broken over that. If the world is so fragile that 25 basis points, 1/4 percentage point is going to make that much difference, then there's nothing that the Fed can do, positive or negative, that's going to impact things. I think there's been a long anticipation of the Fed's move. I think that's helped to reposition both countries and markets to be better ready for this. Some have reformed, some haven't, so they're still going to be hit. But also I think going forward, the Fed is going to be on an extremely gentle path. I see very little prospect for inflation in the near to intermediate term. And so without some more inflation coming back in, I think it's going to be a long time before the Fed takes the next step. And actually, I think the second increase in rates is going to be even more difficult than the first.
Does the Fed care about the rest of the world? Because sometimes you hear people like Christine Lagarde have said the Fed should, look at the global effects of interest rate policy. The Fed has largely sort of dismissed that. Does it care?
Well, you have to remember that every central bank is created by its own government. It's given a mandate to focus primarily on its domestic economy. So that's the mandate of the Fed, as every other central bank in the world. The IMF has a mandate to look internationally, so it's no surprise that Christine Lagarde will have a different perspective than Janet Yellen, because they're given different mandates from their from the origin of their institutions. That said, the Fed certainly does look at those impacts because they want to see how those impacts are going to come back and affect the U.S. Generally, the Fed thinks that a stronger U.S. economy is going to be the best thing for the world economy. And so what can strengthen the U.S. is going to be the key. They're certainly going to look for channels of financial fragility as well as real fragilities coming back hitting the U.S., but the primary focus has to be on the U.S. as it is for every other central bank in the world.
Okay, Amir, Sufi, what do you think about the U.S. as carrying the global economy?
Yeah, I think it's a great question because we already know that Brazil is undergoing a severe economic downturn. They just, I heard, canceled Carnival, like most of the cities. I mean, this is a serious economic downturn when the Brazilians are canceling Carnival. And so then the question I think becomes is how exactly will that affect the United States? And I completely agree with Randy. If you look at the direct exposure of the United States in terms of a cash flow kind of calculation, it's actually quite low. And so then you start to have to ask yourself, how exactly will a potential severe downturn in many emerging markets affect the United States? And I think it actually will affect the United States primarily through what I would call an asset price channel. And so what we teach in introductory finance is that asset prices are a function of expected cash flows and the discount rate you use to discount those cash flows. We know that the actual cash flows probably won't adjust much, but my big concern, if there is one, and I'm not so pessimistic on this front, but is that the discount rate may dramatically change in the U.S. because of concerns of what's going on in emerging markets. This is what technically is called the risk premium effect. You can think of it as just people getting scared. And we know if you look at the single day reaction, for example, in August, when the Chinese stock market had a major correction, the S&P 500 fell 2% or 10% over a period of 3 or 4 days. And you could never justify that kind of movement from changes in what we think the cash flows of the U.S. were going to be. The only way China can affect the U.S. stock market so dramatically is if people are worried about the world in general and therefore use a higher discount rate to discount those cash flows. So then the follow-on effect, the question is, if there is an asset price correction in the U.S., which I think a lot of people are worried about already in the last 10 days or so, we've seen a correction in the S&P 500, will that generally have a bigger impact on the overall U.S. economy through standard wealth effects, through people buying less? Will it affect house prices? I think that's the question. I don't have a definitive answer to that question. I think we look like we're going to have a correction of the S&P 500. It's already started, but it's a little bit harder to know how the knock-on effects on the U.S. economy, how large they will be. My baseline is that they won't be large, and we'll probably continue to muddle along with 2 and 2.5% growth, but not anything too much more robust and not any kind of crash.
What about the rest of the developed world? Eurozone and Japan both in trouble. Do you expect any real substantial growth from them this year or in the next few years?
I think the short answer is no. I think that what we're seeing in those economies that I think reflects some deeper problem. I don't know if I would call it secular stagnation as others have, as Larry Summers has, but these really low interest rates that seem very difficult to budge from being very low is, in my view, an indication of some problem with these economies. And I am an economist who believes that demand can be constrained, even in the long run, and to the point it starts affecting supply. People haven't been working for so long, skills deteriorate. So I'm quite worried about both Europe and Japan on this front. So I think that while I don't necessarily think it's just secular stagnation, that there's this chronic, we don't have a good explanation of exactly what we mean when we say secular stagnation. Do we mean low productivity growth? Do we mean chronically constrained demand? But in any case, I think what the secular stagnation hypothesis has isolated the focus on, which I think is right, is why are these interest rates so chronically low in both Europe and Japan? I think the difference between the 10-year German Bund and the U.S. Treasury, I think, is something like 160 basis points in nominal terms, which is just very high. And so there's something going on in both the Eurozone and in Japan that seems to be keeping these interest rates very low.
Okay. Randall Kroszner?
Following up on that, I think there's a different expectation about inflation. That the U.S. Fed, although it hasn't generated high inflation, and it certainly hasn't even generated its goal of 2% inflation, is more likely to be able to fight deflationary outcomes than in Japan or the Eurozone. I think that's part of what's accounting for it. But I do think that there are other factors. So certainly there's slower population growth in Europe and in Japan. But when you look at productivity, if you look on a per worker basis, it actually isn't nearly as dire as it might seem. Japan has had significant shrinkage in its workforce, but the output per worker has not been shrinking at the same rate. They've been having acceptable, not gangbusters, but acceptable productivity growth. So that gives me a glimmer of hope there. But I think Amir is right that there's something fundamentally different that's going on in terms of market expectations, something fundamentally different in their prospects that are being reflected in low interest rates. This is not just a function of the central bank policy. This is something that I think is broader than that.
Okay. James Robinson, I want to turn to immigration, which was one of the huge stories of 2015 and is likely to be a trend that's going to shape economies and politics for the next few years, and with it, the rise of anti-immigrant politics. What effect could that have on economic growth?
Well, I tend to think of it as being great for economic growth. Economists.
You mean immigration?
Yeah, absolutely. Yeah. I mean, who are these people? These are people, who overcome immense barriers to get out of where they were and move somebody out somewhere else. When I go around the world and people ask me, what's so good about the United States and why is it so economically successful? I always say that, well, there's always problems, but the edge that the United States has over everywhere else is this immense welcoming, this is going to sound very self-serving since I'm British, but this immense, they're just so welcoming of foreigners. And that's not true about Britain. It's not true about China. It's not true about anywhere else in the world. It's just a remarkable thing. And the US has been able to suck talent and entrepreneurship and ideas into it for a couple of 100 years now. And I think that's a huge part of the story of the economic success of the United States. And you see the panic of Europe. They just don't know how to deal with it, and you see this rise of this xenophobia. And so I think that the basic story is that this is great for economic growth, or potentially great, but obviously, maybe it's great for the United States in a sort of relative position, because they're the one place that has the kind of institutions and the mentality and the history of being able to deal with this and integrate these people into society.
Although in the United States as well, you've seen the rise of a kind of dangerous anti-immigrant politics as well.
Well, it's an election, it's democracy, people have the right to, air their opinions and try them out. And, but I don't think that'll be very successful as a political policy or a political platform, to be honest with you. It seems to me that, this country is full of immigrants. It was built by immigrants, and everybody understands that.
Okay, and as you say, in Europe, there's this huge demographic problem of the aging population, and the influx of refugees could actually help deal with that.
Right. So that's one economic benefit. I mean, that's not really what I'm thinking about. I'm thinking much more about the talent and the ideas and the creativity and the energy, and I think the backlash against the concern about terrorism or whatever. These people, they're fleeing from terrorism. They're okay. So the odd terrorist merges in. I don't think that takes away from the not just the human aspect of it, or the human imperative to do something, but all the economic benefits from it. Terrorists. The terrorists who blew up the World Trade Center didn't come in a boat to the United States. They flew business class, and took flying lessons in Florida or something. So, terrorists are always going to wheedle their way in and do damage if they're obsessed enough and determined enough. And so, what's the counterfactual? There wouldn't be any terrorism if these immigrants weren't flooding in. No, of course there would be. And sure, we have to deal with that. But I just think that there's lots of potential economic benefits. You're identifying one, which is this aging population. You bring a lot of young people into work. I mean, I guess that's not what I would focus on, but there's lots of pluses from an economic point of view, it seems to me.
Okay. Well, on that note, our time is up. My thanks to our panel, Randall Kroszner, Amir Sufi, and James Robinson. For more research, analysis, and commentary, visit us online at chicagobooth.edu/capideas, and join us again next time for another Big Question. Goodbye.